we've seen a massive spike in gold and silver deliveries into COMEX vaults, and we've become a net importer of gold. Vince Lancy, someone I respect an awful lot, came out recently and said up to 85% of the gold being delivered around the world is not being reported to the IMF, and he might be right. At the same time, these same central banks are holding gold and demand from places like you said, Asia, India, Russia, Saudi Arabia with their big purchase of SLV the other day. This is all rising sharply. I think these countries are not trusting of the Western system anymore and say, you know, we're just not going to hang on to the paper side of things. Please give us the real.
The collapse of the German Reichsmark serves as a stark historical reminder that even once powerful currencies can become worthless, a lesson that resonates with today's precious metals market dynamics. Veteran precious metals analyst Andy Schectman underscores this point with his observation about receiving an old $20 gold piece, illustrating the dramatic shift in monetary systems and gold's enduring value. While that coin might have been worth only $35 to $40 in 1975, it commands approximately $3,400 today, representing a remarkable appreciation that far outpaces traditional currency holdings. This historical context takes on new significance given the current unprecedented activity in physical gold markets. The COMEX has experienced massive spikes in gold and silver deliveries, coinciding with the United States' transition from a gold exporter to a net importer, a fundamental shift that reflects changing global monetary flows. Central banks worldwide are driving much of this demand, with institutions across Asia, India, Russia, and notably Saudi Arabia, which recently made significant SLV purchases, aggressively accumulating precious metals reserves. The scope of this central bank accumulation is substantial, with gold now comprising approximately 27% of foreign central bank reserves, a significant increase from previous decades, though still well below the 1970s peak of 74%. This gap suggests considerable room for further expansion in proportional gold holdings among central banks. The intensity of current demand is perhaps best illustrated by the August COMEX contract activity, where over 20,165 contracts representing more than 2 million ounces of gold were posted in just the first 3 days, with an unprecedented 100% of these contracts resulting in actual physical delivery. This marks a dramatic departure from historical patterns, where most contracts were settled in cash rather than physical metal. Before we dive deeper into their insights on gold, silver, and the broader financial system, make sure to like this video, subscribe to the channel, and tap the bell icon so you never miss the latest updates.
A man who watched the currency that once had substantial value turn into nothing, worth less than the paper it was printed on, where people supposedly would go to the store with a wheelbarrow full of Reichmark to go to see if there was bread in the store, only to come back and find the wheelbarrow stolen and the Reichmark laying on the ground. For him to send you that letter, to give you that old gold coin, I'm assuming it's probably a $20 gold piece or something along those lines, because all debt prior to World War I was settled in gold. It's very deep. I look at that as having massive symbolic meaning, and to convey the wisdom to future generations that, hey, this happened here, it can happen again, you need to understand what real money is very cool to me, and something I damn well intend to do for my grandchildren too. And that's a really cool story. I appreciate you sharing that. And I would advise everyone just to check out his music. It's really good. I think you'll like it. But thanks for sharing that story. It's cool. In 1975, that would have been worth about $40, if that, $35 or $40. And today it is $3,400. It's appreciated quite a bit, to say the least. But that is a lesson that I have been trying to tell to people forever. There is no better way to pass money on to your family, period, as far as I'm concerned, than something of that nature. And again, I really do appreciate you sharing that story. It's very important, and it really, I think, exemplifies the plurality of uses that gold has. It's not just used as a form of savings or as the backbone of a central bank holdings or any of the things we're told that gold is not for just jewelry. There's a lot more to it. You had mentioned offline that your grandfather buried it in the garden. He was a midnight gardener, who also explains that physical possession is important, that it's an asset that is simultaneously not someone else's liability. And so there's so much that I take away from what you just said. I hope people did as well. I want to jump into the markets and ask you, we're in the middle of the summer doldrums, and in 36 years of selling gold, I understand the summer doldrums very well. Shift gears just a little bit and talk about signals and stress. We've seen a massive spike in gold and silver deliveries into COMEX vaults, and we've become a net importer of gold. Vince Lancy, someone I respect an awful lot, came out recently and said up to 85% of the gold being delivered around the world is not being reported to the IMF. And he might be right. In fact, I'm sure he is right to a degree. I don't know if it's 85% or more or less, but the point that he makes is certainly not lost on me. Much of that metal is actually being offloaded from the exchanges. This is a big difference, not just delivered into the eligible category on COMEX, but actually leaving the vaults. And this is something that we've never really seen before. At the same time, these same central banks are holding gold and demand from places like you said, Asia, India, Russia, Saudi Arabia with their big purchase of SLV the other day. This is all rising sharply. What do you see when you see all of these deliveries? And I would just like to highlight one thing and say, during the majority of my career, which goes back to 1989, 1990, less than 1% of contracts stood for delivery. And when I was looking at the first 3 days of the August contract on COMEX, just the first 3 days, 20,165 or something like that, contracts posted. Now, normally those contracts would either roll over, cash settle, and maybe 1% would stand for delivery. Of those 20,165 contracts, over 2 million ounces of gold, 100% of them stood for delivery. 100%. Now we're over 30,000, I think, for the month, and I don't have the rest of the numbers. But do these deliveries, and the fact that some of it, a lot of it, is actually leaving the exchange, same thing we see happening in the LBMA. I think these countries are not trusting of the Western system anymore and say, we're just not going to hang on to the paper side of things. Please give us the real thing. And that's the part that I think, to your point, whether it be remonetization or not, but this is where, which I agree, but where real price discovery comes in, where and where the rubber meets the road, frankly, where you do not have the ability to rehypothecate, to trade so many contracts off of a single bar. When no one ever stood for delivery, it was easy, right? But when everyone's standing for delivery, a different story. Very, very cool.
Andy Schectman's analysis of the silver markets reveals the complex interplay between market fundamentals and institutional control that characterizes precious metals today. Despite silver's strong underlying fundamentals, Schectman attributes its frequent underperformance to deliberate price suppression through rehypothecation and manipulation by Western central banks, each operating with its own strategic motivations for keeping precious metals prices contained. However, Schectman warns that this manipulation strategy may be approaching its limits and could ultimately backfire on those orchestrating it. He identifies two critical pressure points that could stress the system to its breaking point: an overwhelming number of COMEX players demanding physical delivery, or the continued drain of metal from Western vaults by accumulating central banks. When pressed to forecast gold and silver prices over the next 12 to 24 months, a task he compared to having a gun to your head, Schectman acknowledged the difficulty of such predictions while emphasizing the market's hunger for guidance. He identified several potential catalysts that could drive significant price movements, including accelerating central bank accumulation, escalating geopolitical instability, and mounting stress in physical delivery markets. Let's get back to the interview.
Talk about silver for a minute. David Bateman, he's a billionaire, and he's shown on Twitter, on his Twitter page or his X page, the warehouse full of silver that he took delivery of. Again, removing counterparty risk. And I want people to know that we have 9 vaults around North America, all with Brinks. One of them is a COMEX facility, just one of them, and that's JFK Brinks. And I have a client with over 1 million ounces of 1,000-ounce bars at Brinks JFK. She wanted to store it at Brinks Salt Lake City. And my Royal Canadian Mint distributor, who has them stored at Brinks JFK in the COMEX ecosystem, they're eligible bars, said, no, you don't want to do that. She doesn't want to do it. Well, why? Because if they move to Salt Lake City, then they're no longer in the COMEX ecosystem. Now think of David Bateman's bars in his own warehouse. I said, but that doesn't make sense to me. I said, if they're in the COMEX facility and a Brinks facility, and they get loaded onto a Brinks truck and get moved to another Brinks facility in Salt Lake City, Utah, wouldn't it still be under the same chain of command? He says, no. Once it leaves COMEX, it's out, and it would have to be reassayed to come back in. So you look at a guy like David Bateman, who's got all of this silver. He doesn't plan on sending it back anytime soon. I think it's interesting when we see, and I use that in terms of all the metal that is being delivered off the exchange. Once it leaves, it is not easy to get it back. And most of it, now his may go back someday, but most of it, I would argue, is not going back. And that's something people should think about as they let this marinate a little bit. But anyways, he just came out and said that if just 10% of the gold investment globally, that demand shifted into silver, it would wipe out all the available annual mine supply. So again, thinking of COMEX delivery patterns, or what we see on the LBMA, does this suggest that we are moving closer to that kind of either a structural crunch, a squeeze in silver, or are we seeing silver being remonetized as well, just not backing the system? The U.S. government just changed it, and they changed it from, I'll give the exact terminology, they changed it to a critical mineral, a classification that aligns with other critical minerals like copper and lithium. It's no longer just an industrial. Is something bigger going on with silver in your mind as well, is what I'm getting at? We've already talked about rehypothecation and the manipulation, and some like myself would argue that this is part of the reason that metals like silver underperform, even despite strong fundamentals. So, assuming that manipulation really does exist, and I think you believe it does, the Western central banks have done a great job at holding down the price, and I have reasons why I believe they are. We won't get into that. People following me enough know exactly why I believe the metals, both silver and gold, for different reasons, have been suppressed. But let's just give as a given, do you see a point where these possible manipulations could backfire? For example, too many players stand for delivery on COMEX, or if central banks continue draining Western vaults, what could the consequences be? And I will paraphrase or highlight the LBMA, which, is a T+1 settlement. T is trade day, +1 is settlement. On the third day, the bar should be moving. Good portion of this year, they said, shortage of manpower and trucks at the Bank of England. It's now T+8 weeks. And Dimitri used to publish charts. Yeah, and he did a one graph of 10 years worth of data back then during that market. And he would show the AM fix, bleep, and the PM fix, bleep, into New York. And like 52 out of 58 Sunday nights when the market would open in Asia, straight down. And you're right, we don't see that anymore. And the resiliency is incredible, actually. You're right. And the corrections can still be sharp, but much more abbreviated. I like your take on that. And while you still acknowledge that there is suppression and manipulation, perhaps the physical demand at that level is shortening the duration by which we see that. I'm good with that. I got two more questions for you, brother, and I appreciate your time. You're a fascinating guy. I'd love to meet up with you when you come stateside someday and share a couple glasses of wine and talk about music and about economics and about Grandpa, because he gave you some real solid advice, like deep solid. It actually gives me chills thinking about it. Seriously. Let's talk the next 12 to 24 months. You look out over the next year or two and, you got a gun to your head. What do you see for the gold and silver prices? And is there a catalyst or two that you may be watching closely, or just more of the same? Where do you see the metal going over the next year or two? And I know that's kind of an unfair question, but I don't know. I'm sure people would like to know.
In times of shifting economic landscapes, gold and silver stand apart as anchors of trust and resilience. Unlike currencies or financial instruments that depend on counterparties, these metals carry an intrinsic permanence that has preserved wealth across centuries. Their role extends beyond investment returns, offering families a way to pass on value that cannot be inflated away or erased by policy decisions. They also serve as a reminder that financial systems, no matter how strong they appear, are not immune to stress or failure. Precious metals, by contrast, maintain their relevance through every cycle, quietly bridging past, present, and future. As the world continues to face uncertainty, the importance of holding assets outside traditional structures becomes increasingly clear. Gold and silver, in this light, represent not just commodities, but enduring instruments of financial independence and security for those who choose to safeguard them. How might growing global demand and tightening supply reshape the role of gold and silver in the financial system over the next decade? So stay tuned. If you're interested in real, data-backed insights on the financial system, hit like and subscribe so you don't miss the weekly updates. Additionally, if you follow Bitcoin-related news, consider subscribing to our other channel for more updates. Thank you for your support, and we hope you enjoy the video.